Hey friends, 2025, it's right around the corner and I am planning my goals. I'm planning my goals and I want to share them with all of you today across the categories of investing, my YouTube channel, PPC Ian, Dividend Stock Investing for Everyone, and also just in my personal life. I'm going to cover all of that today. With investing, it's going to be a little bit boring in 2025, most likely, but I want to share it with you. Check it out on the screen in front of you right now. First and foremost, my investing strategy, speaking to my personal situation for 2025, is going to be about SCHD, my favorite dividend growth ETF. In fact, my patrons already know this. I'm going to link to my Patreon in the pinned comment below. I shared some trades that I just made recently, and I just increased my position in SCHD by about 50%. This ETF, however, still has a lot of room to grow in my portfolio, and I want it to grow into one of the top 5 largest positions, and maybe even the number 1 largest position someday. It's funny, after I purchased my shares just a few days ago, the ETF corrected a bit immediately thereafter. Why does this always happen? That's just how it goes. That's why I keep a very long-term perspective, and I just keep dollar cost averaging into the ETF. However, I want to share something really interesting here. The top holding right now in SCHD is Cisco, ticker CSCO. This gives me tech exposure. This is actually a long-term goal of mine. I don't have hardly any tech exposure in my portfolio right now. I have a few positions here and there, but more or less, I do not have exposure. So right now, by adding to SCHD, I can take comfort that at least I'm getting some tech exposure through that ETF. And it's nice to see that their number 1 position right now is Cisco. But let me keep going. As you can see on the screen in front of you right now, I want to share some more stuff. So right now, I'm looking at SCHD. Eventually, I would like to have more tech exposure, but it's really looking like 2026 or 2027, probably until I actually add some individual tech stocks again. But for now, I'll rely on SCHD and possibly DIVO, DIVO as well. Just in terms of some stats, starting yield is 3.38%, which is not bad. What's really amazing, though, is the 5-year dividend CAGR, or compound annual growth rate, is 12% per year on average. So I wanted to start the video today. Shout out to my friend Mark. Mark is a friend of mine. He's been following the channel for a very long time. I met him and his wife in San Francisco at a meetup, PPC Ian meetup back in the day. And he asked me kind of some questions on Patreon today. And those questions, a lot of them were just around my thoughts on tech. And that's why I really wanted to start the video today with these thoughts on SCHD, because look, I'm underweight tech and I don't want to be, but it's a byproduct of my personal risk tolerance. It's also a byproduct of my need for current dividend yield right now, because I use the dividends. I need the dividends right now. And tech in general, on average, tends to yield a little bit lower, especially those really high growth tech stocks that we all know about, such as Apple, for example. I want to own Apple again one day for sure, but right now is not the time. Anyway, tech, it gets all the headlines. It's really exciting. It is a gap in my portfolio because I believe in a well-diversified portfolio with exposure to all of the industries, not just very selective industries. I look at my portfolio in a critical way and I see some risks. I'm over-dependent on certain industries, especially CPG Food, restaurants, and those types of industries. But I did want to point something out today, because sometimes us dividend investors, we're kind of, some people might joke about us out there. They might joke about us, especially those tech investors who had an amazing year in 2024. But dividend investing, in fact, is just as exciting in many cases as technology. And I want to share an example here. I want to share an example. As you can see on the screen, put in the comments below, by the way, if you remember this, but I made a huge trade last December, not this December, but last December 2023 in ALTRIA. I bought ALTRIA at $40.19. Now it's at $56.45. ALTRIA is about as old school as it gets, a boring old dividend stock that really never gets the spotlight because everyone out there kind of loves to hate this stock, whereas everyone just loves to talk about tech by contrast. Anyway, this is a corner case. Of course, I'm cherry picking here one of the best possible examples I could, but I'm doing it to make a point. Basically, dividend stock investing, these stocks are cool too, even though they don't get the spotlight. My unrealized capital appreciation on this stock just over that 1 year period is 40%. And my simple dividend yield on cost is 10.15%. So that 40% doesn't even include the dividend. With the dividend in this year, I've earned unrealized 40% and realized dividend distributions under 10% because they recently increased it, but maybe about 9.75% or so. Anyway, this is exciting. I'm showing this more as just evidence that, hey, dividend stock investing, it is cool too. And us investors who are out there for dividend yield, we can see capital appreciation. It rarely gets covered in the mainstream media because these companies they're not as exciting for people to talk about. But hey, I love dividend stock investing, but I do want to add some of those tech stocks in the future as well. Anyway, I want to keep going. That's part one. Part one of my boring strategy for 2025. What am I going to do? I'm basically going to just keep buying SCHD. I'm just going to buy it every week, every few weeks, keep adding. Yeah, I'll probably be adding to individual stocks in the portfolio as I have been. My patrons see these trades that I make on oftentimes a weekly basis. And recently, a lot of them have been in individual stocks as well. But I'm kind of at the point where I see a backdrop of an overvalued market. And this is honestly why my strategy looking towards 2025, it's so boring. It's boring because the market is overvalued. And yes, I can find certain stocks out there in the portfolio right now that are undervalued. I have been adding to them. But in general, look, the market is expensive and it's hard to find too much value out there right now. In that kind of backdrop, I look at things strategically and I just start thinking, what can I do? You're going to see the second part of the strategy, which is largely around saving cash because I don't see this being the best buying opportunity of all time right now. But I'll get to that in a minute. The first part of the strategy is, hey, I'm just going to keep it simple. I'm going to go with SCHD, keep adding it. I'm trying to build it up to my number one position at some point, and it'll take some time. Even though I just bumped up the position by 50%, I still have a long way to go. Anyway, check it out on the screen. So part two of my investing strategy for 2025. And this is even more boring than part one. Part two is all about bonds, treasuries. And so many of you know, I'll link to some of those videos in the pinned comment below, but over the years, especially in more recent years, I've diversified my portfolio by adding some bonds and notes as well. And I bought treasuries. And I want to do more, funds permitting, in 2025. This is a reflection right now of the overvalued market. I don't see a lot of value in equities right now. And so while I'm waiting for a possible correction around the corner, I'm just going to focus on where I can put some cash aside with minimal risk. These treasuries are guaranteed by the US government. It's part of this is just de-risking strategy by having an element of the portfolio of bonds that I hold to maturity. There's very little risk that the US government will default, and I have an interest rate on those securities, which is great. And I know exactly what it is. So part of it is just de-risking. It takes out the overall portfolio-wide volatility because there's no volatility to these treasuries. Well, they do trade. There is volatility, I guess, on a day-to-day basis if they're traded on the open market. But because I'm not trading them and I hold to maturity and I have a ladder strategy, that takes some volatility and risk out of my overall portfolio. Part of this is a stopgap strategy. Let me talk about that. I've talked about this in the past, but I'm in my mid-40s now. Sooner than later, I'm going to want to slow down and enjoy life more. In fact, that's part of my strategy in 2025. I'm going to get to that in a minute because there's going to be some changes with what I'm doing here on PPC Ian. You'll see later in the video. But hey, I want to enjoy life more. Part of treasuries, what's great is when they mature, I can do what I want with them. I can spend the money for living expenses. If I do that, well, I forego tapping into dividends. I let the dividend portfolio reinvest and compound even more. Or I can take those treasury proceeds and I can invest them into stocks if stocks are on sale, or I can take the proceeds and reinvest them back into other treasuries if the interest rates are looking really good. But I look at treasuries as a stopgap measure, and I look at them kind of as intermediate term emergency fund. It's not emergency fund, hey, I need cash immediately, but let's say over the course of the next 10 years, let's talk about notes, 2-year notes, 3 years, 5 years, 7 years, and 10-year notes. As they mature, those funds become available for possible expenses, which help me delay tapping into dividends. And the longer the dividend portfolio can keep compounding on its own and reinvesting, the bigger it gets. The bigger the snowball gets, the bigger the passive income from those qualified dividends gets. And so I love kind of that stop-gap element to treasuries. But as you can see on the screen in front of you right now, also with treasuries, as I mentioned, it's intermediate term emergency fund strategies. So it's kind of a 3-tiered strategy of de-risking, stopgap for kind of retirement shortfall, and also intermediate term emergency funds. Now, of course, this strategy is very boring, again, as a reflection of really where the market is at right now. And this may all change if the market corrects. If the market corrects overnight, and certainly I see core stocks, great quality stocks on sale all of a sudden, hey, I may pivot. I'm always reserve that right. But check out the current rates to these treasuries. 2 years at 4.13%, 3-year 4.092, 5-year 4.071. As you look at these rates, the current rates, as of right now, December 4th, all of them are in excess of 4%. And I can take those with very minimal risk, in my humble opinion, because these are guaranteed by the faith of the U.S. government. In other words, if the U.S. government cannot pay these treasuries, I think there will be some pretty unprecedented events. And so with that, that's my investing strategy for 2025. Please put in the comments what you think about that. I know it's super boring overall, but sometimes boring is what's best. I got to do the right thing for me, for my personal situation. Of course, I only ever discuss my personal situation here on YouTube. This is not investment advice. I'm speaking to what I'm doing that makes sense for my own risk profile and what I'm trying to accomplish. With that, I want to talk about PPC Ian, the channel you're watching right now, the channel you're hopefully subscribed to right now. I have some changes forthcoming in 2025, and you'll probably start noticing them even sooner. But check it out on the screen right now. So what do I plan for this channel going forward? Well, there's probably going to be fewer YouTube videos, to be honest, on a more haphazard schedule. And the reason for that is I'm kind of feeling some creator burnout, to be honest. What I have found is I cannot keep up with the needs of the algorithm. I cannot keep up with a calendar of posting on like clockwork on certain days because I have so much going on in my life with my family, with my job, with my fitness, with different things I want to accomplish in life. I would say with me for YouTube in 2025, just the harsh reality is it's going to become a little bit more haphazard and not as frequent probably on the videos. But there are some good things as well. So as you can see on the screen in front of you right now, check it out. Okay, so Patreon, I'm going to link to that in the pinned comment below. That will probably be my main focus. I'm going to continue doing what I'm already doing on Patreon, probably amp it up even more because it's just easy. It's more informal, it's easy, it's something I really enjoy. It doesn't involve as much production time and effort as the core YouTube videos, which can be extremely time consuming. And so that will be something you may want to check out if you're not already there. Of course, I'm still going to be there for the true subscribers who care. Look, I'm not trying to chase the algorithm. If that were my game plan, I probably would have had more subscribers by now than I do. I do this because I love the community. I enjoy connecting with people. I enjoy creating the friendships that I've formed all around the world about dividend stock investing. I'm going to post videos when I can. And when I post a video, it may not be kind of the best audio. It may not be produced, to perfection. It may not garner all of the love and results of the algorithm, but I know the core subscribers who care, who are giving me a thumbs up right now. You guys have been here. You've been here all these years and you don't care about all that stuff. And so I'm going to be here for the core subscribers who care. And in particular, I want to say, I want to invest more kind of my time with that. At this point in the game, look, I've never made a ton of money from this YouTube channel. The reason I do it is because of my love of dividend investing and love of the community out there and spreading this inspiration. And so I have had the great opportunity over the years to connect with many of you on direct messages, many of you on Patreon, like my friend Mark today, many of you on Blossom Social. I'll get to this in a minute, but please check out the pinned comment below. It's my affiliate link. In terms of full disclosure, I'll be compensated if you sign up from there. Blossom Social is a new social media platform just for investors that I'm on. I'm having great conversations over there with investors. But what I really want to double down on in 2025 is rather than just trying to chase an unrealistic video schedule for me, I want to focus on what matters, which is the connection with the subscribers, the friends I've made over the years who really matter. And so I want to do more meetups. I want to do more of those direct messages. I just want to connect with all of the friends I've made over the years. And in fact, I have a little mini meetup coming up. You know who you are. I just emailed two of you guys. I can't wait for this to happen, but just things like that. I can't wait. It's going to be a lot of fun. But as you can see on the screen in front of you right now, just some other kind of realities, more at Instagram. I have a lot of fun over there. So I'll link to all this in the pinned comment below. Make sure to connect with me on Instagram. I'm always posting stuff there in my stories, in my feed. I love Instagram. I do a lot of direct messages over there. I have a lot of fun on Instagram. And of course, Blossom Social as well. Blossom Social, which was co-founded by my friend Brandon Beavis. Put in the comments below if you know about Brandon Beavis. He has a YouTube channel, and his dad posts videos on the channel as well. Both of them are a wealth of knowledge. And that's an intended pun because I know they go by Beavis Wealth, and so I thought that would be funny. But anyways, they're both amazing, and their content is great. And Brandon actually co-founded Blossom, and so the app is a reflection of his hard work and his team's hard work. But check it out. My affiliate link, which I do get compensated for when you sign up through my link, is in the pinned comment below. Anyway, let's keep going. As you can see on the screen in front of you right now, I want to move on. I want to move on to my life. What are my life goals in 2025? And by showing you this, it kind of can round out the picture about what I'm trying to accomplish. And maybe I can look back at this in a few years and see kind of, hey, was I on point for 2025 or not? But fitness is a huge goal. This is one of the reasons I have a little less time these days, honestly, for YouTube. Fitness takes time. I want to keep up what I've been doing. We've been going to F45. It's been a game changer. Doing weights, game changer. I haven't been running as much, although I did a 5K with my son for Thanksgiving. That was a lot of fun. But I want to get back into running. Shout out to Ryne Williams, Retire with Ryne. I'll link to his channel in the pinned comment below. He's a friend of mine who's a YouTuber, and he's been running a lot. I see his updates on Instagram all the time, but you're inspiring me, Ryan. I've seen your updates. You're inspiring me to get back into my own running because I've kind of let that go while I focused on the weights and the F45, but I got to do it all. I got to be well-rounded. But as you can see on the screen in front of you, what else? I want to do my snowboarding. I talked about part of the reason my time is more limited on YouTube. Honestly, this is important. I want to share this with you. Fitness is the best investment I can make, or probably anyone watching can make, because it will only save us all money in the long run. And dividends only work over long periods of time. The cash flow comes not now, but in the future. We all want to try to be as healthy as we can so that we can enjoy it when the cash flow is being tapped into. We want to enjoy it in our lifetime. It's not just for the kids, for the future generations, although that's part of it. But we want to enjoy it. And by focusing on fitness, it allows us to do that. I see 2025 also as a year where I'm going to do a lot of organizational things. I'm a really organized person. I feel a sense of peace when things are organized. And there's a lot of work, though, to be done on this. Because my life in general, between businesses, between work, between family stuff, between just portfolio management. The world we live in, it's a lot more complex than it used to be. And my world in particular is a lot more complex than it has ever been. And so I want to organize all these things a little bit better on routine calendars. I want to have calendars for everything, not just digital, but paper. Paper is something, for me at least, that is better than digital. But I want to have calendars for every facet of my life that spells it all out so I never forget anything. And this is something where I also want to involve the family. I want to involve my wife and kids because it gets them up to speed on everything I'm doing. And it helps us be more of a team as we tackle different things that pertain to our family. And so that's a huge theme of mine for 2025, organization and in particular calendaring and journaling all of these things out. But as you can see on the screen, last but not least, travel. I want to keep it up. I just actually hit status, airline status again for 2025. That's an achievement I'm proud of. A lot of it is earned the hard way. A lot of the flights I take are the small planes for more regional flights, and they're not always, the most comfortable situation. But I've earned those miles, I've earned that status, and I want to hit it again. And it's interesting, my favorite airline, they raised the bar. So for 2026 status, which I'll earn in 2025, it's going to be harder. It's going to be more difficult. And status for its own, it gets me some perks and stuff. But the real reason I like to hit it is I see it as an achievement. I see it, oh, Ian, you did travel as much as you're supposed to, because travel is something that's important to me, both for business and for pleasure. But that's something I want to try to obtain. And more importantly than that, I want to visit some new places where I can connect with all of you from the community. Do some of these meetups. Just meet up one-on-one with different people. Even here in the Treasure Valley, put in the comments below. If you're in the greater Boise, Idaho area, let's meet up. I met up with my friend Kevin. Shout out Kevin if you're watching. I want to meet up with more of you. Please put in the comments below if you'd like to meet up and you're in the Treasure Valley area. But I want to collect those mugs, those Starbucks mugs from all over, from new places as well. And so anyways, those are my goals. If you have any goals this year or for 2025, that is, put in the comments below whether they pertain to finance, whether they pertain to your personal life, whether they pertain to your job. Please put in the comments below because this is a community where we motivate and encourage each other. Before I go, in terms of a full disclosure, I own the stocks mentioned today. I am long SCHD, the ETF. I am long Starbucks, ticker SBUX. I am also long ALTRIA, ticker MO. I own those in my personal dividend stock portfolio. Also, I do plan to add DIVO, ticker DIVO at some point. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. It's important that you speak with your licensed financial advisor before making any financial decisions. I'm just sharing my journey here for fun and entertainment. It's not advice. I love you all. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.